Hello and welcome to this Friday's morning market briefing. We've got lots to talk about, but firstly, US inflation falls to 3% in June, as well as that US House Democrat leaders to meet again over Joe Biden's future. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is to do with inflation in the US. Now, the inflation figure for June in the US has now come in at 3%, with this figure coming in below expectations. This figure has now added to bullish bets in the stock market that depend on interest rates being cut sooner than previously expected. Now, of course, the topic of inflation in the US has been a hot topic recently, as really not only has the US, election race started to weigh in and affect the way that people are perceiving inflation and the value that inflation is now holding regarding, the kind of US political system. Of course, inflation is very important for voters. Therefore, it's very important for people like Biden and Trump, because they're going to debate about it and debate how to bring it lower or, bring it to target and that kind of thing. And so ultimately it's been important for that reason. But of course, it's always important to us because we're looking at the markets, every single day. And as a result, the Fed basically dictates US markets, it does feel like, with their monetary policy, the way that affects, the kind of economy as a whole, the macro perspective. Ultimately, the Fed's monetary policy outlook affects markets as a result of that. And therefore, we need to understand what inflation's at, so we understand what, the Fed might then do next, which will then affect markets. And that's obviously the kind of the circular way that the market does end up playing out, and that's why inflation is, of course, very important to cover on this channel. Now, of course, the reason why inflation's kind of been an interesting topic in the US as well for us is because, US inflation has remained very stubborn in comparison to other Western nations, other Western economies. For example, in Britain or with the Eurozone, representing the EU or the kind of certain nations within the EU's economies, ultimately over there across in Europe, we started to see inflation obviously, start to near, or if not reach, in Britain's case especially, target levels. That kind of nominal, that flat inflation rate figure. We're not talking about the core inflation rate figure, we're just talking about the normal inflation rate figure. Those figures in Europe, in the Eurozone and Britain, we have seen those reach the targets now, that of course, political figures and of course, their central banks were putting out as targets. And so that's kind of a large success, of course. In the US though, we haven't seen as greater success. Whilst, at the start of the year, we were really expecting inflation to come down quite significantly, and as a result of that, we were expecting rates to be cut as early as March, and that was, of course, a very optimistic expectation. But expectations of a May rate cut were seemingly guaranteed. Ultimately, though, things did not play out that way at all, and instead, US inflation has remained very stubborn, and as a result, the Fed hasn't had room to cut interest rates, as ultimately there's no real reason for them to cut interest rates at the time where inflation is proving stubborn, and the US economy is still growing. So there's really not that downside to keeping rates where they are, as long as they, whilst they can feel like they're kind of making some progress, or at least attempting to bring down inflation. So that's why we haven't really seen the Fed move or change their policy position regarding interest rates, whilst, in the Eurozone with the ECB, we have actually started to see those 0.25 percentage point rate cuts start to be implemented and roll out. We haven't seen that yet in Britain, of course, but that is now being expected for next month possibly, or the month after. And now this figure for the US is possibly putting the US on that kind of same path that we have seen form for the UK and the Bank of England. And, we're kind of seeing the US now be put onto the path that the Eurozone with the ECB is already on. So inflation is now seemingly on the way down, and therefore the Fed will have room to start cutting interest rates. But obviously, it is still important to note that at the start of the year, we're expecting 6 to 7 interest rate cuts from the Fed. And of course, we have certainly not seen that play out so far. And instead, of course, previous to this inflation figure, it may have changed now, but markets were pricing in only one rate cut for the entirety of the year, which is, of course, a massive downgrade from the 6 to 7 rate cuts that were expected at the start of the year. At the same time, though, the Fed has also downgraded theirs, but obviously, now that we're starting to see inflation come down, possibly there's room to maybe add on another, whilst, we were saying 1 interest rate cut is most likely, there were some expectations still, around the idea of maybe 2 interest rate cuts. So, there's always that option as well. But we'll have to wait and see regarding that. Ultimately, the key thing that we need to note from this article, from this topic, is how this might affect markets. Well, ultimately, as we'll get into on the charts later on, as I hinted to, so stay around so you see that, ultimately, because we're seeing inflation now falling, it's likely that the Fed is going to start moving towards a far more dovish monetary policy, that way cutting interest rates and that kind of thing, which as a result devalues the dollar and gives way to companies, big corporations. It gives them the ability to start using the capital markets, start acquiring debt to grow, and that's why we might then see that uptick once again in the stock market. So definitely keep your eyes on this topic, with this data also pushing the value of the dollar down further. That's what I just spoke about. With this, the figure presents a very encouraging sign for the Fed as the central bank debates about how quickly they should cut interest rates from their 23-year high. The inflation figure represents a significant downturn in inflation, with May's inflation figure coming in at 3.3%. Previous to the figure release, economists had been forecast to expect a figure of 3.1%. As a result of the figure, the dollar has fallen 0.6% against a basket of world currencies. The data release also led Treasury yields to fall as traders ultimately increased their bets that there will be 2 rate cuts this year. US President Joe Biden also commented on the data release and said that it showed that the US was making strong progress fighting inflation. LSEG data shows that the likelihood of a September rate cut is now at 100%, which is in comparison to a 72% likelihood before the figure was released. This latest inflation figure also further fulfills the hopes that Fed Chair Jerome Powell, who in a speech only a few days ago said that he was waiting for some more good data before the Fed would be able to cut interest rates, and we covered that at the time. Oddly though, the S&P 500 and Nasdaq were down on the day following the data release, and obviously we'll come to that and we'll recap on the markets when we come to the charts nearer the end, so make sure to stay around so that you can see that, of course. That's all to talk about on this article though. Next article to talk about is returning to the topic of politics, which of course has been a hot topic recently, with Joe Biden basically fighting for his candidacy, fighting off the rebellion from within his own party, with the likes of Nancy Pelosi, as I believe we covered in yesterday's morning market briefing, ultimately now calling Joe Biden to stand down. And she is not the only Democratic congresswoman, that has of course called for Joe Biden to stand down. No, we've heard from multiple congressmen and women across Capitol Hill that basically told Joe Biden it's time to step down. The polls aren't in your favor and you just don't have the health, you don't have the flair that you used to, and therefore how can we really hope to beat Trump, who seemingly hasn't really degraded regarding health or cognitive skills in comparison to where he was at back in 2020 when of course Joe Biden and Trump were going head to head once again. So definitely keep your eyes on this topic, and it's going to be a very interesting one as things are definitely heating up as more congressmen and women start to weigh into this, and the sooner we get to the election date, the quicker this decision needs to be. And following the decision, there's less time for that candidate to kind of get embedded with voters, build support with grassroots voters, but also build support with the kind of middle of the aisle, and therefore it's making it harder for the new candidate to really step in and make a difference regarding the polls, of course, which at the moment are dramatically in Trump's favour. Now, the top US House Democrat will now meet his leadership team in order to help figure out the next step for the party amid calls for Biden to end his re-election campaign. This comes as Hakeem Jeffries, who is the Democratic leader in the House, has told reporters that he intends to speak with each of the 200 plus House Democrats before making a decision on what to do with the Biden candidacy crisis. So this decision, of course, will be massive. This, it can't really be understated what this kind of large decision from the party's leader will mean for Biden. This kind of will almost represent what the Democrats in the House and arguably also in the Senate, if there's kind of some influence there. So basically how all the Democrats on Capitol Hill feel about Joe Biden. And that, of course, will mean a great deal for Joe Biden, because as we kind of head into the election race, as I've already covered, as I continue on, ultimately he needs that support of the Democratic establishment if he really wants to kind of push through and beat Trump, because at the moment things aren't in his favor, not health wise, but also with the polls. It doesn't seem like the voters are with him at the moment, and so he's going to really need a strong support, a great backing for him really to make a difference, it feels like. And if you've got infighting, if your usual supporters, if the people that sign your laws in are ultimately not supporting you, then how can voters support you? And that's the kind of issue that, of course, Biden is facing, with there now being an increasing number of calls from within the Democrats in Congress for Biden to step down and aside for a younger and more fresh candidate. This obviously comes as many of those in the House begin to worry that due to old age, Biden is not well equipped enough to take on the popular Donald Trump in 2024. One Democrat named Hillary Scholten said that for the good of democracy, Biden needed to stand down. So we're hearing lots of different comments from different people in Congress, of course. The squad, AOC and her, band of Democrats within Congress are, of course, backing Joe Biden still. But as I covered at the start, the likes of Nancy Pelosi, a key establishment figure, and now, we're hearing from Hakeem Jeffries. Ultimately, we don't really have the support maybe that Biden needs to head into this election and win it in the same way that maybe he did back in 2020. So, keep your eyes on this topic, of course. Things are developing by the minute, by the hour. So definitely keep your eyes on this topic, and it is affecting markets as well. So make sure you're staying up to date. That's all to talk about on this article, though. On the articles as a whole, actually, next to talk about, like always, is the charts, where we begin, as always, also with the US 30, the Dow Jones, where some things are actually playing out for once, as over the past month, really, it felt like, or the past few weeks, nothing's really played out on the Dow Jones. Price, as you can see here, really, we've just seen the market trend sideways, really no volatility, and just markets basically ranging and consolidating and that kind of thing. Ultimately, though, as we did note in yesterday's morning market briefing, there was a kind of spur of bullish momentum, as we did see price jump from this area of liquidity that price had been sitting at for nearly a week. Ultimately, price jumped off that level and broke above that key liquidity zone, which is marked out on the upside. So price broke above and out of that key liquidity zone and is now sitting just above and on top of that key area of support. So it'll be very interesting to see whether price can now hold around that level. Of course, definitely keep your eyes on that level. That's all to talk about on the US 30. Next to talk about, though, is the dollar, where also some interesting things are, of course, playing out following, that US inflation rate figure that, of course, has just been released. Now, the dollar has sold off very significantly as a result of that US inflation rate figure, and that's, of course, to be expected when we are receiving a figure which, of course, pushes investors to believe that a more dovish monetary policy is likely to be adopted by the Fed, and that's ultimately because if inflation is coming down, there's not as much reason, of course, for the Fed to hold interest rates high, because that's just costing the US public for no real good reason. So that's why we have, of course, seen this large sell-off. Interestingly, though, kind of the way that price has sold off and the way that price is reacting is quite clean regarding the kind of levels that we had previously noted out. So price had sold off, kind of retraced, broke, hooked, and has now seriously gone to the downside, with price reacting, as we saw on Tuesday, to that key liquidity zone that's previously acted as key area of resistance and support. So price has now sold off from that key area, and now over the course of yesterday, of course, we've swung massively to the downside. But in the process of swinging to the downside, we kind of reached the bottom of the market. We tapped the bottom of the market and kind of formed this triple bottom, which we had seen form on the beginning the 16th of May, but then, really solidified around the 3rd of June, and then once again the 7th of June. And now price is seemingly reacting to it once again. So it's quite interesting to see how, the dollar is playing out. And it'll be very interesting to see, whether price will retrace or, in fact, is this kind of a fake out? Is, the kind of inflation figure still representing the fact that, inflation within the US economy is stubborn, and therefore, will price rise back to the upside for the dollar? Maybe this was just a false breakout, that kind of thing. But definitely keep your eyes on the dollar, of course. And it's interesting to see how price is reacting to these key levels. Definitely draw out a fib as well, so we know that those key levels, which, price might react to next. That's all to talk about on the dollar, though. Next to talk about is Euro USD, which is, of course, reversing the image of the dollar. But here on Euro USD, we've seen price break out to the upside as a result of that kind of dovish news from the US inflation rate figure. So we've seen the euro swing to the upside, break above this key liquidity zone, this key resistance level. That price, of course, reacted to start off the week and ending off last Friday. So it's interesting to see that we've now broken above that level after retracing off that period, off that area, basically throughout the entirety, throughout Monday and Tuesday of this week. So now we are on the upswing, it does feel like, and the question will be whether we'll hook back onto this area of liquidity now that we've broken above it, and then continue this swing higher to possibly reach those higher levels of price around the kind of 1.09315 level. So definitely keep your eyes on Euro USD. It's interesting to see how things are playing out, of course. Next to talk about, though, is pound yen, which providing the same image of the dollar. Prices seemingly just dropped to the downside. So we've seen this massive breakout to the upside over the course of yesterday. When we were covering it on the morning market briefing, we were saying how price had broken out this bullish flag, but ultimately that is that is now representing somewhat of a fake breakout to the upside, and instead of continuing that upswing from that kind of 208 level, we've seen price now sell off significantly to the downside, with price swinging as low as, or at least swinging down to the very clean level of 204. So a massive a massive 4 kind of unit drop there, and it's very interesting to see that is of course taking place. The question will be whether, now that we've kind of reacted to this key psychological level and arguably key liquidity zone, whether now we'll continue this upward movement, this continued bullish swing to the upside, this continued bullish rally that we've seen form over what's really multiple years now, but more recently, of course, the swing to the upside that we've seen form since the 3rd of May 2024. So it'll be interesting to see whether that continues. Definitely keep your eyes on pound yen. Very interesting price action, and of course keep your eyes on any news from the Bank of Japan regarding intervention and changing policy to keep the the yen kind of valuable somewhat. Next to talk about, though, is Bitcoin. Not much to say on Bitcoin at the moment. Price is kind of stalling out and consolidating just at the top of this kind of range that's formed, and near and around this key liquidity zone around the $59,000 a Bitcoin level. So definitely keep your eyes on Bitcoin. When we do see this kind of consolidation at the top of a range, we can often see a breakout to the upside. That's not guaranteed, of course, so definitely keep your eyes on Bitcoin. It'll be interesting to see what does play out, of course. Next to talk about, though, is gold, which has swung massively to the upside as a result of that US inflation rate figure, as all of the kind of inflation rate figures in those key Western economies of the Eurozone, United Kingdom, and of course the US and their central banks, of course, is now all representing a kind of more dovish monetary policy outlook, which kind of explains why we're seeing this massive swing to the upside for gold, with gold now pushing as high as levels that we saw back in May of this year. And should we push higher than those levels, which is really not far now, we'll be breaching into levels never seen before, so pushing into uncharted territory. So definitely keep your eyes on gold, as inflation does affect, of course, gold's price, because gold is a hedge against the dollar. So when the dollar is devalued, we often see gold move to the upside. That's what we'll talk about on gold. Lastly to talk about, though, is oil, which really is just ranging, consolidating. You literally can't see much happening on the 4 hour. You have to zoom in on the 1 hour to really see anything playing out, but there it just looks like price is consolidating and remaining within this small range that's formed and has existed really since the 18th of June, which price broke out of and has now returned to. So it'll be interesting to see whether price now remains within this range as we've seen before. That's all to talk about on the chart. So lastly to talk about is the economic calendar, where to be honest we're not receiving that much economic data today, but some important ones nonetheless to note. Firstly, we're receiving the Chinese balance of trade figure, followed by the Japanese industrial production figure, as well as the French inflation rate figure and US producer price inflation figure, and followed by that, and to end off the day, we're receiving the US consumer sentiment figure. That's all the data to note though. We've got lots on the economic calendar, lots on the charts, and lots on the articles. That's all from us at Wildwood Capital though. Have a great one. See you later. Bye.